Now, two things in life are said to be certain: death and taxes. A new deal between Kenya and China could ease the taxes part of that very popular saying. We'll get into the details of the deal between East Africa's largest economy and the world's second largest economy. In South Africa, the competition watchdog has gone after some of the country's biggest insurers. We have the facts and the details are behind the allegations and the raids. On today's Stock Watch, we look at one trend that came about during the pandemic. Does the meme stock have staying power in the post-COVID-19 world? This is Business Edge. I'm Tolulope Adeleru-Balogun. African business headlines are up first. A bank in Kenya, KCB, has secured 18 billion Kenyan shillings, about $150 million, from the International Finance Corporation to support lending to eco-friendly ventures. The IFC explained that the new facility will have a maturity of 7 years with a grace period of 2 years and will also include the institution providing back office support to KCB on green finance strategy. Kenya's National Bureau of Statistics reports that inflation has accelerated to a record high of 8.5% in August amid a continued increase in food, fuel, and housing costs, even as economic uncertainties loom on the next head of state. Data shows that the country's overall rate of inflation rose from 8.3% in July to 8.5% in August. In the western part of the continent, Nigeria's Vice President, Professor Yemi Osinbajo, has met with the World Bank Group President David Malpass to discuss ending the country's petrol subsidy, which has become a financial burden for Nigeria. In April, the Senate approved 4 trillion naira for petrol subsidy in 2022, following 2 separate requests by the Nigerian president to the National Assembly. It's projected that Nigeria retaining petrol subsidy in 2023 will cost the country nearly 6.7 trillion naira. And staying in Africa's largest economy, head of Nigeria's debt management office, Patience Oniha, says the country's total debt profile as of March 2022 was 41.60 trillion naira. She attributed Nigeria's high debt profile to shortfalls in revenue and the deficits in the annual budget as approved by the National Assembly. And finally, we wrap things up in North Africa, where Osama Rabi, the chairman of the Suez Canal Authority, says 57 ships carrying 3.4 million tons of cargo have sailed through the canal in both directions after a ship which blocked the southern part of the canal was removed. The crude oil ship Affinity 5 was successfully refloated shortly after it ran aground in the canal late on Wednesday. Now traffic in the canal has returned to normal. And those are a few headlines we have for you at this time. Our conversation kicks off in East Africa, where we look at a new potential tax treaty between the East African region's largest economy and China. Stay with us. Kenya and China began bilateral relations in 1963, suspended them in 1967, and rekindled their relationship 11 years later in 1978. Since then, their relationship has taken different dimensions. Over the years, China has provided loans, aid, and assistance with infrastructure projects, and Kenya has opened up its markets to Chinese exports. China is now Kenya's most significant trading partner. And Kenya has announced plans to sign a double taxation agreement. This is a treaty between Kenya and China that will end double taxation of income or gains earned by citizens of both countries. Now let's get into the details of this deal. Satchu, Africa Geo-Economist and CEO of Rich Management, joins me from Nairobi, Kenya. When we look at the relationship so far between Kenya and China, it's a decades-old relationship as it is, basically. Has Kenya really and fully benefited from this relationship?
That's an interesting question. I would say the relationship really accelerated over the last 2 decades. President Kibaki's Look East philosophy informed that acceleration. China is a serious player, particularly on the infrastructure side. The SGR, our biggest infrastructure project post-independence, was financed and built by the Chinese. I think for quite a while it was a little bit lopsided, this relationship, and I think what we're about to speak about and recent developments are seeking to sort of rebalance and recalibrate that relationship. But largely at the moment, Kenya is a taker, and that is creating a lopsidedness in this China-Kenya relationship.
All right, so let's look at this treaty. Double taxation is something we know many around the world speak of in different ways. It's been with us here in Nigeria. There's a conversation around local, states, and even federal taxes. So for this double taxation treaty that Kenya and China are looking at, how would it work?
So it's interesting. What it's carved out a whole bunch of businesses, and basically, if you are, for example, a Kenyan business doing business in China, you will not suffer taxation in China and in Kenya. And similarly, a Chinese business doing business in Kenya and in China will not suffer double taxation on the business that they're doing. So I think it's a progressive move. It's seeking to make things more efficient for Kenyan and Chinese businesses operating in each other's jurisdictions. And I think it makes a lot of sense. The only challenge that I've found is it seems to be excluding the creative sector, and I'm not sure why that's happened. But overall, a progressive step makes sense and long overdue.
And so as you talked about the creative sector, just for the audience's information, what we have is that there are those who will be exempted from having to pay, or rather not having to pay, these possible double taxes. And those include actors, radio and TV personalities, musicians, and athletes that are still basically going to face double taxation. So if we're saying they're facing this, and the idea is that if you're a business in Kenya exporting to China, you won't face taxes in China. How does it work for those in the creative space who are apparently facing taxes and there's not going to be any easing for them?
I was surprised that they were excluded from this treatment, and I'm not sure what exactly has happened. I suspect they haven't made adequate representations to the Treasury, and I'm sure they'll be included. So I don't think it's anything sinister. It's probably just more complex from the Treasury side, and I think they probably haven't canvassed stakeholders in the sector. So I think we'll see a positive move there as well. I think it's just an error of omission.
Okay, so now in terms of how this will affect trade imbalance, let's also look at that. So the Observatory of Economic Complexity says that exports from China to Kenya were worth around $4.89 billion in 2020, and exports from Kenya to China were worth just about $149 million. And then we also have Kenya's Statistics Office, which talks about the trade deficit with China, and it says that has grown from 371 billion shillings in 2021 to 425 billion shillings as of March this year. So do you think this tax treaty, this double taxation treaty, will have some kind of effect on the trade imbalance between Kenya and China?
So, those numbers confirm what I was calling a lopsided situation. I mean, that's pretty lopsided when you're looking at something like, I think your quote would be about 45-1 or 40-1 in China's favor. And clearly there's a need now to rebalance that situation. I don't think that this double taxation treaty is a silver bullet for rebalancing that imbalance. I think, really, the silver bullet is encouraging Kenyan exports into the Chinese market. The significant development in that regard has been the export in the last few weeks of avocados, for example. This falls under President Xi Jinping's Green Lanes strategy, which he outlined at the last FOCAC meeting. where he spoke about stimulating particularly agri-exports into the Chinese market. African agri-exports have found it difficult to crack the Chinese market because of the regulatory environment, but there seems to be a definite effort to encourage that. So really, from my perspective, I would say if Kenya is seeking to rebalance the relationship, we've got to load up on agricultural exports. We're a strong agri-economy. Most of our agricultural exports go to the EU. But price-wise, it looks like China's prices are very competitive versus our historical export markets. And I think that's where we need to focus on. I think where this double taxation treaty will help is, this whole idea that Chinese workers are now quite expensive in comparison to what they cost 10, 20 years ago. And many economists have spoken about the need to move some of China's manufacturing away from China and possibly onto the African continent. And I think because of Kenya's positioning, the port of Mombasa, the railway that China has helped to build, there is a unique and cheap energy, by the way, which is a big challenge globally. We have limitless supplies of geothermal energy. There is a very big opportunity here for China to reposition some of its possibly low-cost manufacturing into Kenya and stimulate the manufacturing side of the Kenyan economy, and with that start to reduce this very egregious imbalance that we see in the trade numbers.
So let's also look at the FDI numbers. That might be a place where there might be some benefits more for the Kenyan side of things. Now, in 2020, Chinese companies and individuals invested around $629 million in the Kenyan economy. Do you think that with this double taxation treaty coming about, it's going to increase the potential for FDI into Kenya particularly?
Yes, definitely. I think that number is probably understated because there are lots of Chinese businesses which are under the radar and probably not counted into that number. So I suspect the number is higher. Yes, I think definitely this double taxation treaty will stimulate that FDI investment into Kenya. And as I said, there is this sort of interesting trifecta of cheap energy transportation to the port of Mombasa, and that way reaching the 3 billion people that exist around that Indian Ocean economy. So yes, I suspect that FDI is going to strengthen, accelerate, and the curve is going to steepen.
While on the surface of this looks like a good deal for both Kenyan businesses and individuals and Chinese businesses and individuals. But it seems that in the first probably couple of years, we'll see a lot more Chinese businesses and individuals being able to benefit. How does Kenya quickly catch up? Because at the end of the day, many people will be looking to see how beneficial this relationship is, with the fact that many have described China's relationship with Kenya and a lot of the other African countries as being predatory.
Yeah, that's a very interesting question. I think, nothing is for free. And I think Kenyans and Africans have got to work harder at exploring and entering the Chinese market. It's a huge market. I mean, globally, the Americans, the Europeans have all been tapping into that market. And I think, this is now the African moment vis-a-vis China because of the geopolitical complexities that have arisen in the last 18 months and what has become quite adversarial in terms of the relationship between those continents and China. And I think this is an opening for Africa and for Kenya to see if we can really accelerate what we're doing with China from our perspective. Look, it's not easy. I think, there's the language barrier, there is regulatory challenges that we've got to face down. But this is the world we look at today. It was quite interesting. I was visiting a bank and I was on the lift and there was a Kenyan lady and she was speaking fluent Chinese. And that sort of thing is what's ultimately going to make the difference to our capacity to explore the Chinese market. I think, going back to that avocado story, you've got some firms like Kakuzi, a Kenyan farm enterprise here, And you've got others who, as we see them succeed, which I think they will do, and they're already very bullish about the opportunity, I think that's going to be a positive catalyst for other companies to think to themselves, well, if they can do it, we can do it too. And therefore, I foresee the real interesting space right now as agri, because Kenya is still largely an agricultural economy. And then following from that, I think, we're going to see a lot of manufacturing type stuff happening. Already, I was speaking to another friend who said, there is no space in the EPZ in Nairobi. That caught me by surprise. So, there are things happening. There is an acceleration going on. And I think people are understanding that you cannot ignore a 1.4 billion size economy where there is considerable spending power.
So is this the kind of agreement you would expect other African countries to want to replicate across the continent as well?
Yes, absolutely. It's a no-brainer. I think, it speaks to a maturing of the relationship between African countries and China. And I would expect it to be replicated right across the continent. There's no reason why you wouldn't do it. I mean, it doesn't make sense. This type of agreement has been the advantage that Mauritius has had. Mauritius has always been ahead of the regulatory environment in making sure that they had these types of agreements in place with the rest of the world. And it's meant that they've had an advantage that countries have gone through Mauritius to access Africa. It's high time individual African countries understood the advantage of doing these types of agreements. It's a net gain.
Okay. And final question, even though it's not specifically on this tax treaty, it does have to do with Kenya and China. And we heard the news, of course, that China is planning to forgive 23 matured interest-free loans from 17 African countries. Right now, the specific countries are still in doubt, but we do have an idea of who should be on the list. Unfortunately, Kenya is not one of those countries because it is a low middle income country. But there's also the issue of China's debt, or rather Kenya's debt to China. So wouldn't Kenya also benefit from some kind of restructuring, some kind of an amount of debt forgiveness? This treaty is a fantastic thing, but also easing the pressure from the debt that Kenya owes to China would also be probably a more fantastic thing in the long run.
Absolutely. I mean, you're not incorrect. Right now, the pressure on Kenya's budget. I mean, China is a big lender to Kenya on a bilateral basis, particularly because of the SGR. But the problem right now is the payments that Kenya is making on those loans are very lumpy. I think for about 4 to 5 years in total, and that's what's putting a lot of pressure on the Treasury. So you are absolutely correct. It would make sense for Kenya. Debt forgiveness would be, the cherry on top of the cake to some degree. Alternatively, one could reprofile that debt, stretch it out a bit longer in order to reduce the payments that we're making monthly. Because right now we've got quite an ironic situation in that support from the IMF and the World Bank, which has also been forthcoming and very helpful in the last 2 to 3 years, is essentially rooting out to make these payments to China. I think, for a long time, we've heard this whole predatory lending story about China, and Chinese lending is at a higher interest rate because they can't print dollars, whereas, the US can, so it should be cheaper out of the US. And I think, but what I'm seeing, whether it's in Zambia, the Sri Lanka settlement, is China is being a responsible global citizen at the moment. So yes, this is the right time, I think, Kenya under a new government to go and knock on their door and say, look, come on, give us a little bit of a break here. We've got some big payments we've got to make to you. It would make more sense and be more sustainable if we can reduce the payments and we don't mind stretching out the maturity of the loan.
All right, so we'll leave it at that, Ali Khan. This does look like an interesting treaty, and we'll see if there are other African economies that pick up on it and aim to replicate it. Thank you so much for your time today.
Thank you.
And you're watching Business Edge. The Kenya-China tax treaty is going to be one for us to definitely look at, but it might take a bit more for the Kenyan side to be able to take full benefit of this treaty, and we'll be keeping our eyes on it. What else are we keeping our eyes on? The international stories we have for you, and that's coming up in just a bit. A top official at Russia's central bank has said that the country's banks lost a combined 1.5 trillion rubles, about $24.95 billion in the first 6 months of 2022. The first deputy chairman of Russia's central bank, Dmitry Tulin, said around two-thirds of banks' losses are related to foreign currency operations, but there is a more than 50% chance that those losses for the full year would not exceed the 1.5 trillion figure from the first half. It is the first time the regulator has disclosed banking sector earnings since Russia sent troops into Ukraine in February, triggering international sanctions. Russia looks set to resume gas supplies through its key pipeline to Europe, a relief for markets even as fears persist about more halts this winter. As prices surge, grid data indicates that flows will resume on Saturday at 20% of capacity as planned. It has become a persistent worry among policymakers in Europe that when Russia shuts the Nord Stream pipeline for what it says is necessary maintenance, it may not restart. A senior Asian executive at Credit Suisse has said the company is still betting big on China and plans to launch a wealth business there next year. The head of the Asia Pacific Wealth Management business, Benjamin Cavalli, revealed that the bank aims to start offering wealth management services in China after securing full ownership of its local securities venture, which is likely by the first quarter of 2023. Asian markets struggled again on Friday as the dollar held gains and rate hike expectations grew, with traders now focusing on a key U.S. jobs report for release later today. Healthy readings on U.S. factory activity, unemployment claims, and private jobs creation indicate that the world's top economy remains strong despite rising interest rates and 4-decade-high inflation figures. And oil prices climbed on Friday on bets that OPEC Plus will discuss output cuts at a meeting on September the 5th, though benchmarks were on track for a steep weekly decline as fears of China's COVID-19 curbs and weak global growth weighed on the market. Brent crude futures rose while U.S. WTI crude futures jumped, with both benchmark contracts sliding 3% in the previous session to 2-week lows. Brent is headed for a weekly drop of nearly 7%, and WTI is on track to fall about 5% for this week. You're watching Business Edge. When we come back, we are in the southern part of the continent where South Africa's competition watchdog is taking on some of the country's biggest insurance firms. We'll have the details after this.